Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Here's our Bitcoin chart. I'm on the 4-hour. As always, the chart link is provided for free in the notes, so you can punch us in and pull up this exact chart on TradingView with these indicators as well, and you will see. Just like we said, basically got the sell-off test down here. Didn't quite make it down to the bottom of the range, green line and heart line. Got the retest back up of the orange breakdown. So this was acting as support. We fell down from it, found support, came back up, retested it as resistance, found resistance on the top trend line, found resistance on the break from the bottom trend line. And then we got rejected again, like I said. Came down here below the 9200 point again. Could not get above it. Once we could not get above it again, we were pinched into this descending triangle and broke down from it to the bottom of the range, which is exactly what I called out to the T. We came down exactly to the heart line and touched it perfectly, and came down below the bottom of the triangle and put in another one of these wicks right here. Now, in the event that was the 8 o'clock candle closing right there. In the event that the 12 o'clock candle closes below this breakdown point right there, I would expect continuation to the downside. If we can get back above it and close essentially like back in the 9100, let's say, range, we could find support here and at least move back up to the 9200 or even as high up here as like 9300. Without invalidating this range, and essentially just continue oscillating inside of that. And if you've forgotten how long this pattern's been going on for and how important it is, the green line was basically the trend moving up at an accelerated rate. Yellow was the trend starting to level out, and then now here we are basically leveled out in this descending pattern or distribution range at the top of the move. And we were basically selling off at a more extreme angle, like the orange channel right here. We started selling off at less of an extreme angle and moved into the yellow channel right here. And now here we are pinched in the top half of the yellow channel between that and the bottom green line that's been acting as support. So what we would expect to happen right here is, in the event of a breakout, we would expect us to break out to the upside and put in another lower high, lower close basically than 10,150, but I think at this point in time that's less likely to happen because this is starting to look more and more like a descending triangle and distribution. And in the event of a breakdown, our initial target is going to be the red line or the bottom of the range right here at 8,800. Next will be the 236 at 8,200, and then the 382 at 7,097 or 7,100 is going to correspond with the long-term parabolic green trend line, which is one of the most important lines. And then on the top side of the range, the red descending red resistance right now, or support, because we're on top of it. We've basically been able to stay on top of it now since the beginning of May. So we got May, June, July on top of this thing, 3 months consolidation outside of the range. It's possible now we're going to find support here and get that continuation to the upside. But as far as I'm concerned, I'm going to go out to a longer time frame. As far as I'm concerned, this is still just a giant descending broadening wedge. So essentially all that's happening is we're basically in this broadening wedge pattern. And I mean, you could draw it however you want, but essentially the idea being that we're basically putting in continual lower highs and lower lows, but the slope of the top line is less intense than the slope of the bottom line. So the lows are going down faster than the highs are going down. So it makes basically like this descending broadening wedge pattern. And there's a lot of different ways that you could put it on here, depending on how you're looking at this and how you're looking at the wicks, etc. But essentially, that is a bullish pattern. But you know, a bullish pattern, it doesn't feel like it when you go from 14,000 down to 4,000. But the idea is that when we do break out of this pattern, is that we'll get the break to the upside and take out this high when we do. So, but I still think at this point in time that the most important thing is essentially this red trend line on the top and the green trend line here on the bottom. The longer we can stay outside of this red trend line that was our highs right here, the more likely we are to break to the upside. But as we see in this situation here, we stayed out of it for quite a while, attempted to break out of it again, and then finally sold back off. Couldn't even, when we retested, get the closes back out of it. Barely got one here, and then got the massive capitulation move. And I think as the economy and everything starts to play out, we've not done enough measures to essentially like keep the flywheel spinning. We stopped the economy, and then we did like a pathetic attempt to restart it, and we barely even got the flywheel to move, let alone to actually start spinning again. So everybody knows that it takes a lot more energy to get the car started than it does to keep the engine running. And in this case, I don't think that the world as a whole, or the United States as a whole, has done enough to keep the engine running or restart the flywheel. I think if anything, we're just puttering around, making a bunch of noise, and spending money or wasting gas, however you want to look at it. But the car's not really running. We're not really going anywhere. So, but we'll see where it goes down the line. And I did want to take a quick moment and just touch on. Rather than you guys listening to ads every day from me and me spending like 5 minutes in the middle of my videos or beginnings or ends or whatever to like pitch my stuff and give you a little spiel, I just want to ask you to take the time to like, share, subscribe, etc. I do want to keep this channel free for as long as possible, ideally forever, but it does take a lot of my time and effort to make these videos, provide all these free indicators, charts, etc. And it would be a lot easier if I just charged, because then it would weed out like a lot of the, just random people here for a freebie. So, but again, that's not the ideal situation. I'd rather just continue to give everything away for free. And if you would like that, if you could just please take the time and put something in the comments so that I know that is what you guys are interested in, and you can help me to grow the channel and keep it free. We are hitting the 500 point, and I'm very excited about that. 500 subscribers. I think we'll grow even faster the second half up to that 1,000, and hopefully exponential after that. But we are coming up on basically almost a year of the channel. It's super exciting. It's grown a ton. We've added a bunch of awesome indicators and features to the channel, and still kept it free. So first year, successfully kept the channel completely free to the community. No ads, nothing for sale, completely done out of my own kindness or effort, as well as community contributions and donations. So I do really appreciate that, and I don't see any reason why we can't continue to grow it at the rate or faster, and provide even more free content down the line. So thanks a lot, guys. Crypto Trend Trader, I really appreciate each and every one of you. So now here we are at the top of this pattern here, and essentially what's happening is we're starting to roll over, and we're expecting now the sell-off to basically come through. You can see we are pointed down, getting ready for the cross. We're going to get the hard sell signal very soon. Let me switch this over here. Go over to the weekly real quick. And you will notice that just switching this to the weekly and the monthly. There we go. So you'll notice we basically we've been in this distribution zone all through the top right here, and now basically what's getting ready to happen is we're getting ready to get the cross. We left the distribution zone like I was talking about. We're no longer above the distribution zone, so it's no longer lit up red. But now when this blue crosses below the purple, which we could get a little bounce here off the cyan and get like a move up, but more than likely what's going to eventually happen is we get that cross and hard sell like that, at which point in time we're going to really get like the dump down, and that's where we're going to see like the legitimate retracement for the wave come in, and that is what I'm expecting. Once again, we put in a very clear bearish divergence here. We have our low on the TJD TDMACD, or I'm sorry, our high right here on the histogram, and then we have a higher high here on the histogram, and you'll see in price action we have the price action right here, and then we have a lower high on price action right here closes. So we have high right here, And then we have on price action, we have a lower high, but on the histogram, we have a higher high. That is a bearish divergence. It took more energy to get the price less high. So we would expect sell-off now to come in and dump that back down. And not only now have we developed that on the weekly, we have also developed it on the daily. And I can't remember. I think we had some on the 4 hour as well. But basically, you know, we're continuing to float up here, but there's no reason to. I don't see any reason why this is going to continue to go now. I think part of what happens with distribution is, you know, people get confused with the time. It takes a bunch of time, basically, to sell off these massive positions at the top of the range before price action dumps. And a lot of times people see, like, this floor being put in, and they get, like, a false sense of confidence because every time it comes down to the floor, you get this move. But what they don't realize is that the move's getting smaller every time you hit that floor. And that eventually nobody's going to support it anymore, and then it's just going to fall straight through. And you know, that's becoming more and more evident the longer we hang out in this range. So, and I don't have to tell you about moving averages. They're very easy to use, and it's very clear what's going on here. Just like we said, once the red crosses below the yellow, we're confirmed in a downtrend on our shorter time frame period. We have a red histogram on the TJD TDMACD, and all of our indicator oscillators are pointed to the downside on every single time frame right now. The only one that's going up is still the white, and that is the most lagging of the. And then you'll see when we came down here once again, we were talking about the 377 and the 528. We came down to the 377, came down to the 377, came just past it, and now here we blew straight through it on the last dump here. And where did we stop at? We stopped exactly at the 528. Exactly at the 528. Exactly at the 528. So if you're looking for you know, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. There is a reason I provide all these indicators and oscillators for free. They work absolutely amazingly. They're all my personal settings. I highly recommend using these moving averages if you're interested in scalping anything from short time frames to long time frames, or even just buying. If you're into buying support and selling resistance, moving averages are amazing because you don't have to draw anything on the chart. It does it all for you. Not to mention, it also puts in the binary pivots, which is basically like support resistance zones, and then you also have the parabolic SAR built into this one as well. So it's basically like a 3-pack all built into one, all made by your boy. Personally, all my settings, all my moving averages, and tuned to my own specific likings. These are my 3 favorite indicators, basically. Well, Bellina Cessna and the Jewel Thief are basically the same. So, as far as what I like the Bellina Cessna because you can be lazy and not have to change between time frames. But to tell you the truth, the knife is probably one of, if not the most useful tool in my tool belt, and proprietary. I wrote the formula for the knife myself, so no one ever will use that or have that available to them. So, but there we have it, guys. That's our TA for today. Once again, although we haven't been getting very much movement in the price action, we have been perfectly calling out and nailing that movement to the T. I would expect that to continue to happen. We've basically got the market, you know, in the palm of our hands, and it's doing whatever we say. You know, I'm looking for a little bit of price action, a little bit of movement, but I've just been focused a little bit more on traditional markets lately and what's really going on with the economy, you know, tying up loose ends and taking care of business before, like, the big strife hits. I am still very confident in my technical analysis of these markets as of now. I do think it's very likely that we are very near, if not already putting in the top on traditional markets. And although we'll see some specific like assets still go on runs or still stay stronger than the overall market, I'm expecting the weakness to prevail. I'm also expecting short term that weakness to transfer exponentially into crypto markets. And based on like Bitcoin dominance and everything, I think basically when this sell-off hits, I think the altcoins are going to get wrecked, and then we'll see the Bitcoin dominance spike. I don't think it's going to be the other way around. Where essentially like Bitcoin dominance falls and the altcoins continue to run. I think it would be the opposite either way, whether Bitcoin goes on a run next and breaks out and Bitcoin dominance goes up, or Bitcoin breaks to the downside and everybody liquidates all their altcoins and then Bitcoin dominance goes up. Either way, I see Bitcoin dominance rising from this point rather than falling. But we'll see how that goes, and we'll see how all this plays out. Crypto trend trader, the range trade, and as far as I'm concerned right now, we essentially look like we're breaking down from the bottom of our diagonal right here. We're retesting it as resistance, and if we find this as resistance at noon today and continue to sell off, I would expect us not to just come down to the heart line, not to just come down basically to like this 8800 range, but essentially to touch some of the more substantial points down here. But I would expect like that cluster of like 8800 to like 8600 to become like the key target area. You know, I'd like for us to find strength right here and then get the move back up to the upside, consolidate, and break out. But again, it's looking more and more likely that our target to the downside are going to play out here. So, crypto trend trader, and I'm out of here.